Hey, John Stevenson here, the Guaranteed Retirement Guy, and I'm going to talk to you about the best types of annuities for retirement. So, annuity types vary depending on what you're looking for in retirement. If you're older, maybe in your 80s, a lot of times people will think, well, do I need an annuity? Am I too old for it? And I would say no. The answer is you're definitely not too old for it. But there might be some annuities that are better for you versus someone who is 60 or 65. And maybe not. It depends on you. It depends on what you're looking for. If you're looking for guaranteed income, then a fixed index annuity still might be the solution for you. But if you already have your income needs covered, then maybe having something like a MYGA or a fixed annuity is what they call it, that will give you maybe a guaranteed rate of return. And so rates right now are high. If you're looking, let's say you want, 7 years locked in at 5.5% or 6%, whatever they are right now, then you can have that. You can live off the interest, and then you still have the principal amount available to leave to your beneficiaries. Now, if you're typically wanting higher income, then you would choose a fixed index annuity, which typically will give you a higher payout rate of more than 5.5% or 6%, but the account balance may go down depending on what the index earns you. So it really depends. But I'm going to just kind of go over this, and I'm going to share this in my video so you can be the judge and decide for yourself. All right, so I'm going to use myself and my wife as an example. And I'm going to say I'm 65 years old right now, and my wife is 4 years younger than me, so I'll put her at 61. But I don't need the income for 5 years. Maybe I'm going to wait to take my income because I'm going to keep working till I'm 70, and I'm going to take the maximum amount of Social Security I could possibly get at age 70. And so at the same time, I'm also going to defer taking income from my annuity for 5 years. I'm going to let that income account value grow. Okay. And so in this case, I put $500,000 in. Okay. Maybe it's in a 401k or an IRA, or maybe it's just brokerage money. It really doesn't matter. The guaranteed income is the same. But you notice as I scroll down, the highest income that I can get, and I can look at a bunch of these, but you can see the highest income is around $50,000. Okay. And that's guaranteed joint income for both me and my wife, Holly. So if I pass away early, she's going to keep taking that $50,000 a year for the rest of her life as well. So if we decide, if we take that out for 30 years, we're going to take out, $1.5 million in income. If we live longer, then we're going to take more. So that's how that works, and that's guaranteed. Now, let's say on the other hand, I'm just looking for some income, from my principal, but I don't want to reduce my principal. Because if you notice, and let me just show you real quick what that looks like. So if I was to go into here, and it's going to show me worst case and best case. It'll show me worst case scenario. The index earns nothing. Your account value is going to go down really fast, but of course your income will keep going for the rest of your life. So, which is good. And hypothetically speaking, if it earns these outrageous rates, 19%, 20%, 10%, all these years over and over and over, well, then my account balance is going to go up, and I'm still going to get my guaranteed income. And when I pass away, I'm going to leave $2.6 million of my account balance to my beneficiaries, which, in a perfect world, that would be great. But this is based off of a 165% participation rate in the index, which may change to 100% or less next year, especially if they get options at a much more expensive price than they got during this year. And so that's a thing to think about when you look at these index annuities. You really never know what the growth is going to be. And so you just kind of base it off of hypothetical. And so what I tell people, whenever they see numbers like this, I tell them, do not count on this. Okay. Usually index annuities will average, I would say, between 5 and 7% on average, some less, some more. I mean, I've seen some do double digits, but it really just depends on the company, the carrier. It depends on the market conditions. There's a lot of things that go into it. So you can't be basing your retirement based off of your account value. It's all about the contracted income. And so we're talking about, best annuities for retirement. Okay, so it depends on you. It depends on what you're looking for. If you're looking for a guaranteed income for the rest of your life and you don't have to mess with it, then a fixed index annuity is perfect. Let's talk about the fixed annuities. So those are not guaranteed for life. They're just guaranteed for a period. Okay, so if I went into a top MYGA, okay, top MYGAs are multi-year guaranteed annuities. So I'm just going to look at the 5 through the 10-year terms, just so you can kind of see what they're paying right now, which of course are kind of high right now compared to what they were 2 years ago, but you can see what they're paying. So 5 years, 6%, 6%, let's see, 6%. So 5 through 7 is 6%, and then you see 5.9, 5.9, and you can see a 6% for the 10-year. So that's not bad. So if I did a 10-year, which is, the highest, the longest I could do with a 6%, then I could just take 6% every year. If I decided to take out the interest, I'm taking out $30,000 a year, guaranteed. I could just take the interest out. And at the end of that period, I could just take my $500,000 out and put it into something else. Maybe an index annuity for income. But you don't know what rates are going to be at that point. So that's the issue that you have, is you do not know what rates are going to be. You don't know if that's going to give you more or less income than what you're used to. And it's, and so that's the thing, is you have to consider when you're looking for guaranteed income for life, typically the payout is a lot better. And of course it's for life with a fixed index annuity versus these ones. Now, if it's just lazy money and you don't, lazy money, what I call lazy money is money you don't need for income, you don't need for retirement, you just want growth more than you're getting somewhere else. And so if that's the case, then this is perfect. You can just let this sit and grow and compound. And you'll see every year that account value grows. And by the time 10 years rolls around, it's grown to $895,000. $395,000 of compounded interest is pretty good. So, and then if you want to take that and roll into something else, you certainly can. But it just depends on what you're looking for. I mean, $30,000 a year right now, yeah, that's pretty good. You can take that. If you want to just go apples to apples, if I go back to, all right, so if I was to take income immediately, seeing that I'm 65, my wife's 61, and we want income immediately, F&G is still going to pay me a little bit more. It's going to pay me $32,600. And now it's not only for 10 years, it's for 20, 30, 40 years. Doesn't matter how long we live. Okay, that's what's great about guaranteed income for life, is it's guaranteed for life. If I don't need it now, then of course fixed index annuities give you more. I mean, if I wait 2 years, you can see it's $38,000. You can see there's some annuities that will pay you more up front, but then less later on. But $39,000 a year, that's not bad. So it really just depends on what you're looking for in retirement. If you're looking for the highest income and guarantee for the rest of your life, and you don't want to have to worry about rolling it into something else, you don't want your spouse to have to worry about it, then a fixed index annuity is great. And if you're looking for something that has if you don't want to take income for 5, 6, 7, 8 years, fixed index annuities will way outperform anything else, because the income that you're going to get from those guaranteed is going to be a lot higher than anywhere else, because the income account value can grow as much as 7 to 9% guaranteed every single year, which is the value that they actually use to determine your income. So, all right, there's a lot to unpack here, but I hope this was helpful. I just want to give you some info on the best types of annuities for retirement. And your situation could be much different. But if you want to talk about this and you want to get on a Zoom call, go ahead and book a call with me. You'll notice that there is a link below this video, and we'll go over your situation. We'll see what annuities would work best for you, and we'll go from there. If that's something that makes sense for you, I can help you. We can set it up for you. And if not, that's not a problem either. So I'm happy to help how I can. And I appreciate you watching the video, and look forward to seeing you in the next one.